Yes. So about cost accounting, okay. About cost accounting, the main idea of this conversation is to introduce the course called the cost accounting to you. What is it that is expected of you knowing, and what are you going to be doing in the course? That is what we are going to discuss in cost accounting, so that you know what we are going to cover, to just at least give you the general overview of the entire cost accounting. Is that clear? And are you able to see the screen where I'm writing?
Yes, sir.
Okay, thank you for the feedback. So now, what is cost accounting? What is it all about? And how different is it from financial accounting that you did last time? Okay. You see, last time you had a course called financial accounting, where you were learning how to report to both the internal management, that's the management of the institution, of the business, and you learned how to report using those concepts that we learned in financial accounting to the external environment. So that is what you learned in financial accounting. But this time around, so you will just learn that the financial accounting that you had last time had its own focus, and the general focus thereof was to teach you how to report mainly to the external environment, that is to the external partners, the external stakeholders. Yeah, it was not mainly for internal use. That's why there were some standards that needed to be followed for you to report. There were some formats that were established by the International Accounting Standard Board. So you had all those regulations to follow under financial accounting. It should interest you to learn that cost accounting, instead of dealing with the external reporting, it deals with internal reporting. Mainly, it is also, most of the times people also call this management accounting. It is usually used for management purposes. The information that you get from cost accounting shall help the management in making sound decisions. Okay, so mainly cost accounting is for management, and for that reason there may not be some given standards or given regulations, I would say, so, or formats in the way how you should report. But mainly what we do under cost accounting, we just want to do the calculations and make sure that the information that we extract can just be communicated to for internal use. So mainly there are no stipulated guidelines on the way how you should communicate and report that information. Mainly you just report in the way that you know that the manager will do what we do understand under cost accounting. This one, it is the accounting of costs. You and I may be aware that the businesses that are there to maximize profit, that are there to do those transactions, always incur costs. Okay, there are different costs that are incurred, and now you should follow nicely. The total costs, okay, the total cost that we have is made up of the following. Number one, the cost that we have is made up of the raw materials. The raw materials. There is a cost of raw materials that you're going to use into production. And after that, there is the cost of what? Of labor. Okay? You're going to use labor into production. So there is the cost of Okay. So there is the cost of what? There is the cost of labor. All right. So there is a cost of what? There is a cost of labor. At the same time, we know that there is the cost of the direct expenses. So you cost direct material, direct labor, and the cost of direct what? Expenses. Okay. You cost the direct what? Expenses. When you sum all these costs, and you should pay attention to this, when you add all these costs, they give you what is called prime what? Prime costs. Okay. So therefore, prime cost is made up of direct raw materials, direct labor, and direct what? Expenses. So when you get all those direct costs, then the direct costs give you what is known as what? The prime costs. Is that clear? Okay. I have already highlighted about the direct cost. Are you able to hear me? I might be speaking and continuing speaking alone. See, the mic is off. People are unable to.
Yes, I'm able to hear you, sir.
Okay. Thank you for the feedback. Yeah. So once you have the prime costs, okay, which are just the direct material cost, direct labor costs, and direct expenses, then obvious there should be the indirect what? Costs. The indirect what? Costs. Now, these indirect costs, and you should pay attention, please, to this conversation. I repeat this several times because it's the one that shall keep you where you are going. If you fail to understand this one, or you find it, or you struggle to get this one, then you have problems everywhere you go. Pay attention. There are indirect costs now. The indirect what? The indirect costs. So there we have got the indirect raw material costs, the indirect labor cost, and the indirect expenses. Okay. The indirect raw materials, labor, and okay, all that forms what you call the indirect costs. The direct costs are called the prime costs, right? Then the indirect costs are called the overheads. And this is very important for you to understand. The overheads, okay? So overheads, it is a collective term. I'll use these terms, so I'm introducing you to the language today. Pay attention. When I say overheads, I am referring to all the indirect what? Indirect costs, indirect material costs, indirect labor, indirect expenses. Maybe the question should be, what do you mean by direct and what do you mean by indirect, sir? Okay, by direct, we mean the cost can be directly attributed to the product that is being produced. You can attribute that cost directly to the service or to the good that you're producing. Then that cost is called a direct cost. Okay? Like you can trace, you can know that the reason as to why this cost has been incurred, it is specifically because of this product that we are producing. I think that is clear now. So even for labor, we know that the reason as to why we are paying for this labor, it is because of the product that we are producing. But when you talk about the indirect one, these you cannot directly attribute them with the product that you're producing. They cannot be traced directly to the services or the goods that we are doing what? That we are producing. So that's why we call them the indirect what? The indirect costs. For example, we have the cost of what do we have? We have the cost of let's say the supervisors, the wages of supervisors. I give you the examples. The wages of supervisors, Okay. The supervisors are there to supervise, right? They are just there to supervise. And they are supervising those people who are working to produce the product that we are producing. So now, the salaries of those people who are directly involved in the production of that product is called the direct labor costs. But the money that is paid to the supervisor, the people who are supervising those, that labor is not directly related to the product that we are producing. Okay, so we call it as an indirect labor. I've given you an example. So as long as the costs cannot be directly attributed, so all the indirect costs, indirect material, indirect labor, and the indirect expenses collectively, they are called what? The overhead costs. Therefore, the total cost shall be the sum of overhead costs plus what? The prime costs. Total cost this time around has, according to cost accounting, when you talk about the total cost, the way how we understand total cost from here, we get it that total cost is referring to the prime cost plus the overhead what? The overhead costs. Is that clear now?
Sir,
Did
come
you get that
again.
one? Okay.
No.
Okay, I am repeating. I am saying that the total cost shall be the sum of the prime costs plus the overheads. What do we mean by prime costs? We say by prime costs, we refer to all the direct costs that you incur. Could be direct materials costs, direct labor costs, direct expenses. And what do we mean by direct? I repeat, they are called direct because they can be directly, okay, attributed to the cost of the good or the product that you are producing. You can directly attribute these to a specific product, okay, that is being produced. For that reason, you can call them as the direct costs. Then the indirect ones are those that you cannot directly attribute, and all the indirect costs, that is to say, the indirect raw materials cost, the indirect labor cost, the indirect expenses, they form what you call the overheads. And therefore, overheads, it is the collective term that is used to refer to the indirect costs. Whereas the prime cost, it is the collective term referring to all the direct costs. Therefore, the total cost shall be the sum of the prime cost and the overhead cost. When you consolidate the prime cost and the overhead cost, you have the total cost. Is that fair now?
It is.
Okay. And now if you have understood this, then we are safe. So when we start doing cost accounting, what we are going to do, number one, we will learn that these same costs can be classified. So we are going to learn, we are going to learn what is known as the cost classification. Okay, we are going to do cost classification, classifying the costs, cost classification. That's what we are going to do, number one. Once we have classified these costs, the costs can be classified in different ways. They can be classified according to their behavior in what is known as cost behavior. They can be classified according to their function, that is functional categorization, according to their function. And again, they can be classified, according to the use of the same. So let's take, for example, let me start from the major one. The major division of the cost. Costs can be classified as to either fixed costs or variable costs, right? Being the major classification. They can either be fixed costs or the variable the variable cost. Then according to the function, you can classify them according to what they are used to do. And again, according to behavior, you can have the costs that, for example, you have what you call the step-up costs, right? That change, once they change for example, for a period of time, they change and they remain fixed for some time. Again, after some time, they upgrade, they change to another level, and then they remain fixed up to a period, for a certain period of time. Again, after some time, they change like that. Those are called the step-up costs. So generally, we will learn how the costs are classified. Don't worry about that. Once we have done that, we have learned how to classify the costs. It shall be very, very necessary for us to learn now. We zero in and start costing these costs. After we have classified the costs, then we'll study their behavior. Then we will study now the raw materials, the raw material costs. So we'll learn how to cost, how to account for raw materials, okay? Accounting of raw materials. How do you record in your books the cost of the raw materials? That is what we're going to learn actually in this unit, okay? You learn how to account for the raw material. Remember, I talked about the way how the total costs are broken down, right? So now we'll zero in and start looking at them one by one. Start with the raw materials. How do you cost? How do you account for the raw material cost, the cost of raw material? How do you account for that? Under this one, we will have interesting methods of inventory valuation. You will learn the major things that you learn under this one are the inventory evaluation methods, such as number one, first in, first out method, last in, first out method, LIFO, weighted average or AVCO method. You learn the simple average method, simple average method. You learn the replacement what? The replacement method, okay? The replacement method. And when you learn all these different costs, these are the methods that are used to value the inventories. No, sir, you are now sounding so technical. Would you try to speak plain? Let me be plain a bit. You see, the way how we value the inventories. When you bring the inventories into the warehouse, there are different methods, and these are the methods that we use to issue those inventories, okay? There are different methods that we are going to use to issue those inventories out of the what? The house, out of the warehouse to go for where? For production. Remember, when you get the raw materials or the inventories, they have to be sent to the production. You produce and then you sell them. So now, moving them from the from the inventories to go and produce them and sell them, okay, and sell them. There are different methods that we use. Okay, the first one, I'm just giving you the gist of what you're going to be doing, is what is called first in, first out method. What about this one? This is where you begin by issuing out the inventories that came first into the what? Into the storehouse. Those that came in first, like they came, for example, today, and if there is need of issuing, you have to issue them first, okay, to the sales department and sell them. Then we'll talk about those in detail and how to calculate, don't worry. Then there is the last in, first out method. With this one, what came in last, okay? What came in last is what you're going to issue first. Let me give you the common example of first in, first out. Most of you have been going to ShopRite, for example, to buy bread, right? And when you reach there on the shelves, what happens? Where do they put the new bread? Let me ask this question. Where do they put the new bread? On top or down? People have been going on, you haven't been paying attention to that. Question to the class. Where do they put the new bread that has just been produced today? Hello?
Unfortunately, here there's no ShopRite in Choma.
Okay, don't worry about ShopRite or any shop. Okay, from Logic. Where do you think you can put the new bread that you have produced today? You have a mix of the bread that was produced yesterday, the day before yesterday, and what you have produced today. Now, when you're packing, when you're stacking, where are you going? How are you going to arrange the things? Are you going to put the new bread on top, or you're going to put the new bread down? And how are you going to arrange? Okay, from Logic now, if there is no ShopRite there.
We'll put the new bread down top. Sorry, at the back, so that the old stock finishes first.
Okay, so that is an idea of first. That's an example of first in, first what? First out. So we use it mainly, this method, we use it for perishable goods. We want to sell them before they can go bad. So first of all, what came in first, we'll have to make sure we sell first what came in first. And that's why people who have done this, who have attended such classes, when you go, for example, in shop, you'll find the bread packed maybe 3 layers. They go down. If you want the bread that will stay in your house, maybe you want to keep the bread for 5 days, for example, it doesn't go bad for 5 days. People go down, you go down to that one which is down, okay? And then you say, but I think they can be against if they hear me teaching this. But anyways, they play with the public like that. Because when you get the bread that is on top, usually you put on top. That's how you even package. The old one should be on top. That is about to expire. So that people can get it before it does what? It expires. You got that one?
Yes, sir.
All right, let me not go so much in details of this. So basically, these are different methods that we use to issue those. Let me just say these are. So we'll discuss these in detail, each of them and how to calculate. By the way, this is accounting. We'll do more of calculations. Actually, there are a few theories if there are any notes here. It's just calculations. So we'll do the calculations and prepare the statements together. Once we have learned how to cost for raw materials, what are we going to learn? Cost of labor. The way how I arranged the direct material cost, you remember? The cost of labor now. We will teach you how to cost for what? To cost for labor. Okay? What are you going to learn here? You're going to just learn how we account for what? For labor. A very interesting conversation. Usually this is compulsory to the human resource management. You even learn here how to prepare a payroll. Most of you just see the payroll, you don't know how it is prepared. Okay? You don't know how to prepare. You don't know how to pay for overtime, even the mechanism or the criterion that is used, okay, to come up with the costs, with the prices for overtime. You don't know how overtime should be paid. You don't even know how working during the public holidays should be paid and why it should be paid like that. You don't understand. We have very interesting conversations. You also learn how to form a wages control account. Because when you go on a trial balance, most of you just see that part of wages, right? Just there is a part on the trial balance for wages and salaries. There is just that grand total. But how that total is produced, how they come up with that same total that goes, it is actually gotten from the wages control account. So we'll show you how to write and prepare the wages control account. We'll have very, very interesting conversations. What methods do we use to pay for people, to remunerate people? Should we pay them on how should I say, on piecework ratings? or should we pay them based on the output that they have produced? Should we give them fixed salaries? Should we pay them per hour? What do you need to consider? Those are the conversations that we're going to be holding under cost of labor. And this will be chapter number 4 of cost accounting. Are you okay?
Yes, sir.
Okay. So basically, I'm trying to highlight and present the whole course, the entire course to you. So now, after you have learned how to cost for labor and the cost the direct expenses, then you would have known how to cost for the prime costs, right? How to cost for the prime costs. Then on number 5, we will change and consider the indirect costs. And the costing of indirect costs is called the overhead costing. A very, very fundamental cost that is examinable. There has never been an exam that I've seen so far without this topic, overhead costing. You will always have a question under overhead costing. Mostly, I would say 95% of exams, they always have this topic, overhead costing, very important. Okay, so you will learn how we cost the indirect cost. Those are overheads. A very fundamental cost topic, because if you don't understand this one, then you have problem in the subsequent topics. In chapter number 6, now you learn process costing. Process costing, you're going to learn how to cost the processes, right? There are those, how should I say, the productions, where as you are producing, it takes a process, I should say that the product that you're producing, it has to pass through different stages. It's a process. For example, let me give you an example of maybe manufacturing a car. There can be the first stage, maybe you assemble here, first stage you're assembling the car. Then from assembling, you go on a part where maybe they do some, how should I say, they start they're doing maybe the painting, Then from there is another stage, okay? So these are the processes. So you learn how to cost for the processes, okay? Those manufacturing processes, you need to learn how to cost them. And that is in the the topic called process costing. You learn how to cost for services. You even learn how to cost for services, service costing. How can you cost services? Because it's usually very difficult. It's not really difficult, complicated a bit, costing services. Many people don't know how to cost services. Okay, how can you cost the services like the ones that we are offering you right now? What mechanism are we using to come up with the prices that we tell you to be paying? Okay, so that is what is there. You learn how to cost for services and how to account for that. Once you've done that, you will learn marginal costing and absorption costing. Marginal costing and the absorption costing. So once you've done marginal costing and absorption costing on number 8, chapter number 8, you learn budgeting. You learn how to form a budget now. Yeah. Budgeting is very, very important. Learn how to budget. You don't know how to come up with even a monthly budget, just a simple monthly budget. You don't know. But here you learn how to come up with, even with a national budget, right? We want to train you to a degree whereby you can manage to come up with even with the budget for the entire company. Even a family budget, you can't come up. Oh, okay, let's start from individual budget, your own budget. You can't come up with a monthly budget. Can't come up with a yearly budget, right? As an individual. You can't come up with family budget. So there will be budgets for the entire institution, coming up with an entire budget for the whole year for the institution. That's in budgeting. You learn how to budget. Even you learn how to budget for many years, including these same skills. You build on them in management accounting and some higher levels of accounting. especially to those accounting majors, that's when you have who hold those higher conversations somewhere in third year and fourth year, together with me, if you still be interested in studying with me. So we will show you how we come up with even the national budget. Yeah, so we learn how to budget anyways in chapter number 8. Then chapter number 9, we'll do variance analysis, which is the last topic. Variance analysis. Now, what is it that we are learning under variance analysis? We are teaching you how to harmonize the actual costs and the budgeted costs. Okay, the actual costs and the budgeted what? Costs. What do I mean by actual cost and budgeted cost? Oftentimes, you create budgets, for example, for these. No, we are going to spend this much this year. You're going to spend this much on this much on that much on that, and that much on what? On that year. After we have budgeted how much we are intending to spend on that, for that, then when that year comes, you're going to start spending, right? Sometimes you will be finding yourself spending more than what you had budgeted. Okay. Sometimes you'll be finding yourself spending way less than what you had planned to do to spend. Now, the differences between the expected expenditure, that is your budgeted expenditure, and the actual expenditure is what you call the variances. Okay, that's what you call the variances. You look at how much did you budget to spend, how much have you spent, then the difference is called the what? The variances. So basically, in variance analysis, you will learn how to analyze these differences. That's what you'll be doing, comparing these in terms of material costs, in terms of labor costs, in terms of overheads. You still repeat these same things. So you learn the budgeted costs and the actual costs, and then you learn how to harmonize and explain for the causes of the variances. Do we have a positive variance? That simply means we have spent, less than what you had budgeted. But why? Okay, there should be reasons. So that's what variance analysis deals with. When you do that, we would have met the demands of the cost accounting.